gold is much higher than it was back then. It's not just that the stocks are down. The value of the gold that they own is way up. And I think the earnings on these gold mining stocks are just going to explode. I mean, nobody has even put a pencil to a piece of paper to determine how much money these gold companies are going to make at $4,000 gold. And of course, we're not going to stay at $4,000 gold. Next year, we'll be at $5,000 gold, maybe $6,000 gold. So, these companies are just going to make a ton of money. And, Wall Street is just like waking up to this, I mean, there is no Mag 7 in the gold stocks, right? We don't have any anachronisms. There's not, it's not like tech, right? Everybody's all over tech. So, the gold stocks are going to be, like that. I mean, at some point.
Gold has finally broken out after consolidating for the majority of the year, and seasoned economist Peter Schiff believes this is only the start of a huge move. Schiff warns that the financial system is on the verge of collapse as global bond yields increase and deficits get out of hand. He thinks investors will lose faith in the US dollar if they see that the Fed's illusion of control is rapidly eroding and that inflation isn't going away. Schiff predicts that at that point, money would flow back into gold, the ultimate safe haven, and out of bonds and riskier investments. Schiff cites significant Wall Street firms that have previously alluded to this change, such as Morgan Stanley's recommendation that investors sell treasuries in light of growing fiscal pressure. He contends that the Fed will soon be forced to resume quantitative easing due to Washington's mounting debt load, which would lead to yet another round of money printing and the next parabolic spike in gold prices. If you want more content on precious metals investing, be sure to like, subscribe, and click the bell.
Like, what will that do to prices, mining stocks in general? What do you think?
Well, first of all, if half of the money in bonds at Wall Street firms went into gold, who the hell knows how high the price would go, right? I mean, first of all, it's going to impact bonds. Now, the bond market is a lot bigger than the gold market for now. Eventually the gold market might be bigger when the price moves up a lot more. But what Morgan Stanley was effectively doing is putting out a sell signal on treasuries, telling its customers to sell treasuries. So that's going to have an impact. If more Wall Street firms want to sell treasuries, the central banks are selling treasuries, and the treasury is selling treasuries like they're going out of style, which they are, but they're selling more treasuries than ever. Our deficits are trillions per year. So at a time where the U.S. government is selling more treasuries than ever before, the buyers of treasuries don't want them. That's why the Fed is going to have to buy them. The Fed right now is selling treasuries. They're still doing quantitative tightening. But I think they're going to be forced to reverse that into quantitative easing. And that's going to send inflation through the roof. And I think the gold market already sees that, or investors. And that's one of the reasons why they keep selling dollars and buying gold. Wall Street starting to move customers towards gold is going to be a big deal. And I think not only are they going to be moving their customers out of bonds into gold, they're going to be moving customers out of Bitcoin into gold. Because I think a lot of Wall Street, even though they haven't been big promoters, I think a lot of the discount firms that have set up a Bitcoin ETFs, they have enabled a lot of investor money to flow into Bitcoin. And I think a lot of the money that went into Bitcoin ETFs came out of gold ETFs and gold mining stocks. And I think those investors who got frustrated with gold's lackluster performance and the weakness in gold stocks and who decided to move their chips over to Bitcoin ETFs, I think next year, when they look back at this year and they see that gold stocks more than doubled and Bitcoin maybe was flat to lower, I mean, it's up on the year right now, but it could dump in Q4. I think you're going to see a pretty big exodus of that money out of the Bitcoin ETFs back into gold and gold equities. And not only is that going to help push gold and gold equities up, but it's going to crash Bitcoin even more, because a lot of the money that went into the Bitcoin ETFs ain't coming out, right? It's like a money roach motel. You can check your money in, but you can't check it out, because when you try to sell, the market crashes. In early 2024, and I was critiquing this on my podcast, but you had a couple of firms basically downgrade Newmont and Barrick to sells. And they said that there's no more upside in gold. Gold was at 2,000, and the analysts were saying, look, gold is pretty much fully priced here. it's more likely to go down, and so there's no point in buying these gold stocks. And of course, since then, the price of gold has almost doubled. It's almost 4,000 now. And these mining stocks that they put sell recommendations on have more than doubled since they put sells on them. So Wall Street did not anticipate this trade at all. And they're only now starting to get positions. And that's why I think this move has got so far to go. I don't think there's going to be any substantial pullbacks. I mean, there'll be pullbacks for a day or two, but I don't think you're going to get, 10% drops in gold, or even, even 3 or 4% is going to be tough, right? Because there's so much money now waiting to come in that any dip is going to get bought pretty aggressively. And that's what I've been telling like my customers at Schiff Gold. I just keep saying, stop waiting for a pullback. You're going to be waiting forever. And then you're going to end up buying at a much higher price. Just buy. You want to buy gold, buy it. You want to buy silver, buy it. Don't get cute. Don't try to get a pullback, because even if you get a pullback, chances are it won't be enough and you'll miss it. By the time you buy it, it'll be higher. So just buy it, because what you really need to do is you're getting out of the dollar. The dollar is a sinking ship. The only unknown is how fast it's going to go all the way to the bottom. But we know that it's sinking. So the sooner you get off, the better. And the longer you wait, the higher the water level is going to be by the time you get off. So you just got to buy. And the same thing on these gold stocks. They've doubled, and some have tripled. But if you look at where they are in relation to where they were 10, 20 years ago, a lot of them are still a lot cheaper. But gold is much higher than it was back then. It's not just that the stocks are down. The value of the gold that they own is way up. And I think the earnings on these gold mining stocks are just going to explode. I mean, nobody has even put a pencil to a piece of paper to determine how much money these gold companies are going to make at $4,000 gold. And of course, we're not going to stay at $4,000 gold. Next year, we'll be at $5,000 gold, maybe $6,000 gold. So, these companies are just going to make a ton of money. And, Wall Street is just like waking up to this, I mean, there is no Mag 7 in the gold stocks, right? We don't have any anachronisms. There's not, it's not like tech, right? Everybody is all over tech. So, the gold stocks are going to be, like that. I mean, at some point.
U.S. government shutdowns, according to Peter Schiff, are merely political theater stunts meant to divert attention from the underlying crisis. He cautions that Donald Trump's attempt to run the country like a private company, the Federal Reserve's lack of independence, and Washington's skyrocketing debt pose the real threat. Schiff highlights that the demand for jewelry isn't driving this rally, but rather fear, as gold approaches $4,000 an ounce. He claims that gold is the canary in the monetary coal mine, signaling that the global economy is becoming less confident in the US dollar. The sale of dollars and US treasuries by central banks worldwide to accumulate gold is a sign of a loss in trust in US monetary and fiscal policy. Now, let's get back and hear his following words.
But what are the ramifications of a government shutdown? Let's start high level here.
Well, first of all, they're never going to solve the fiscal problems. So the shutdown's got nothing to do with that. But look, I mean, it's all a charade. How many government shutdowns have we had? Yet the government is still here. I mean, I could get my arms around a real government shutdown where they actually shut down the government, but they don't. They don't shut it down. You know what they do? They shut down the national parks and they make a big deal. Oh, these people went to Yosemite and they couldn't get in. But most of the government is still operating. It's not like all the rules and regulations are somehow on pause. They still take taxes out of your pay. You don't get a break on the income tax or the Social Security tax because the government is shut down. No, the government is still there, ruining your life, making you have to work a lot harder. So they're never real shutdowns. They're just for show. They shut down certain things. And of course, they furlough a bunch of the government employees who love a government shutdown because they get paid. They just don't have to show up and go to work. Now, I just assume the government workers not go to work because usually whatever they're doing is screwing us up. It's probably better if they stay home, even though we pay them because they're doing less damage if they're not at work. But look, it's all a political theater. The real problem with the government shutdowns is A, they don't shut down enough, and B, at the end of the day, they always reopen government back up. So we're stuck with it. So I don't really pay much attention to it. I think there's much bigger problems than the shutdown. The problems are the massive government spending, the huge deficits, the fact that now you have the president trying to hijack the Federal Reserve and stack it with a bunch of cronies to remove even a pretense of Fed independence. And then you have, Donald Trump, shaking down private companies, extracting concessions, taking stakes, micromanaging the United States as if it was his own private company, right? This is all part of Trump enterprises. I think this is a horrible approach to government. I think it sets a lot of dangerous precedents for future presidents to abuse the powers that Trump is usurping. I really hope the courts put a stop to what's going on. But, you mentioned gold's at $3,850. I mean, that's $150 less than $4,000. I mean, think about that. $150 and we're at $4,000 gold. This is not something that should be dismissed. When the price of gold is doing this, it's not like it's, the price of cheese, or something like that, or lumber or soybeans, because this is not about, we got a bad crop, there was a drought, there was a flood, or there was just a big increase in demand for, corn or whatever. This is gold, right? It's not like Americans or everybody else all of a sudden wants a lot more jewelry, right? There's not a run on the jewelry stores. Gold is going up because of its monetary properties. It is a monetary metal. And when gold is rising like this, it is a warning sign, right? It is the canary in the monetary coal mine. And when you see this happening, it is a warning that something bad is happening. And, the biggest buyers of the gold are foreign central banks. Now, don't you think they know something? I mean, they're the insiders in the monetary system, right? And they're buying gold as fast as they can. And it's really like they're selling dollars, right? These are insiders that are dumping dollars, and they're dumping treasuries, and they're buying gold. Why are they doing that? Why are they foregoing the yield on U.S. treasuries to hold gold and have no yield? That tells you something. And in fact, Wall Street is finally recognizing this. A week or two ago, Morgan Stanley tweaked for the first time the 60-40 portfolio, that sacrosanct 60% stocks, 40% bonds. They decided to cut the bond portion in half and make it 20% bonds, 20% gold. Now, I've never seen that in my entire career.
Peter Schiff didn't mince words when he called government shutdowns nothing more than political theater in his most recent statements. He claimed that despite the commotion, the government never really shuts down. Thus, these shutdowns are really a show. The majority of agencies continue to operate, taxes are being collected, and laws are still enforced. Only federal employees who are paid to stay at home enjoy shutdowns. He clarified that excessive government spending, growing deficits, and political meddling in the Federal Reserve are the true issues, not short-term shutdowns. Schiff cautioned that Trump's attempt to run the nation like a business, including controlling markets and investing in businesses, creates a risky precedent for presidents to follow. He then discussed gold, which has increased to about $4,000 an ounce, and claimed that this increase is due to gold being the world's warning sign for financial disaster rather than a demand for jewelry. Schiff clarified that gold is a monetary metal rather than a commodity like timber or corn. This kind of price spike indicates that people are becoming less trusting of the dollar and the international financial system. Schiff pointed out that insiders in the monetary world, or foreign central banks, are selling US dollars and treasuries while purchasing gold at record rates, indicating that they anticipate something that most investors do not. He next talked about gold, which has risen to almost $4,000 an ounce. He asserted that this gain is not because of a demand for jewelry, but rather because gold is the world's warning sign for financial catastrophe. Schiff explained that gold is not a commodity like grain or lumber, but rather a monetary metal. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Your support means a lot.